You're listening to the RE Social Podcast with your hosts, Andrew and Vince from OnV Invest. For more information, go to onvinvest.com.
All right, you guys, thanks again for tuning into another episode of the RE Social Podcast. We've got some very special guests with us today. Vince is with me. Vince, say hi to the peoples.
What's up, guys?
And introduce our lovely guests. We've got two guests today.
Yeah, so we have some of our good friends. It's Nicole and Ryan here. They're both lenders, and I'll let them introduce themselves.
My name is Ryan Kreiss. I'm a branch manager at Cherry Creek Mortgage. Been doing mortgages since about 2016. Probably 14 hours a day consistent.
Wow.
Didn't take a day off for about the first 2 years, so
Wow.
crammed in a lot of time.
I was just going to say, 2016. Like, I'm jumping ahead because I know your income, and I'm like, wait a minute, what? You did what? And how much time?
Yeah.
I thought you were going to say it's like 2006. I'm like, all right, that makes sense.
Well, for the first 2 years, I didn't take a day off. So my old branch manager, Tom Ramirez, he's with New American Funding, the Downey branch.
Mm-hmm.
He was the one that told me, if you work consistent for 2 years, you'll never have to go searching for business again.
Nice.
It's like, all right, that's exactly what I'm going to do.
And you did that.
Seemed to work out, yeah.
So you had a mentor.
I wouldn't say so much like someone that sat. I did, but Tom was more. He oversaw the whole branch.
Got it.
Definitely picked up a lot of important points and things from him, and seeing his success over the years was very motivating.
Yeah.
He was his branch was funding over $1 billion a year at one point.
Yep. That's awesome, man.
Yeah.
Wow. Yeah, sometimes you just got to be in the same room with somebody and like just see that, oh, he's just like a cool guy. Like he's not like a Elon Musk or Bill Gates type, and he's crushing it. Like, oh, why can't I do that?
Yeah, exactly.
You know, you're the average of the 5 closest friends.
Yeah,
You know, so
yeah.
That's cool. Did we skip over Nicole?
Yeah.
We introduced
No.
her.
We
but
haven't.
We didn't skip over me. We were just taking our time.
Yeah. I want to make sure we
I'm
give
Nicole.
you some light. Yeah.
Yeah, I'm a newer loan officer with Cherry Creek Mortgage right now. So working with Ryan, he's kind of showing me the ropes. I've been in it for like 6 months.
Nice.
Originally a physician assistant and still doing that part-time.
Cool.
Anybody who's watching, they're both taken, unfortunately. The first time I met Nicole, she was like, this is my boyfriend. I'm like, who, him? I'm like, out of here. Don't even come to my meetups anymore. And then I met Ryan. He was super cool.
Yeah.
The meetups were just a scam to meet
It's,
women.
it's just a
Just
scam
the
to meet
women.
Nicole, dude.
It's a funnel.
The whole time.
It's a funnel.
Yeah, they're actually getting married
Yeah.
later this year, right?
Yep.
We'll see.
Probably. Well, so the plan is in 2 months, but that's a lot of shit to
Wow. Yeah.
cram
Wow.
in there in 2 months.
Mm-hmm.
Yeah, that's a
So,
lot.
We'll see.
I'd probably schedule out a little bit just with like the Omicron variant and all that, you know, like for me,
Yeah.
I've got some events coming up. I'm like, I'm going to wait till next month to book like April, May
Yeah.
for my stuff. Just because this thing just, you know, it comes up and it goes away and it goes up, you know?
Totally.
So, yeah, but that's pretty cool. So what's it like? I'm rabbit trailing a little bit off of probably the topic that, you know, the guests are listening for, but what's it like to work and live together? Like, is it a lot or what? I would need a break.
It was a little bumpy at first, for
I would
sure.
need a break personally.
Yeah. I mean, he was the one that actually kind of talked me into it. I was interested in real estate, but I was going to go the realtor route.
Got it.
And he was like, no, like, you should try the lender route. It's so much better. Like, just believe me. So
Cool.
I did because he's pretty smart.
Yeah.
So I trusted him, and it was good. And then I think it just gets hard because you know, you're used to being really comfortable with a certain person, and you want to keep things professional when you're at work. And so sometimes those lines kind of get like blurred and crossed.
Right.
But I think we're figuring it out. It gets better and better.
That's great.
Yeah, you pretty much want to kill the person.
Yeah. That's what I'm just assuming that's if I was, I mean, no matter how great my girl would be, and she's amazing. You guys are amazing together, obviously, but I just like, whoo.
You go from wanting to kill them to wanting to kill them less and less and less and less, and then everything kind of gets into sync. And
That's improvement.
now we're
Progress.
it's a huge learning curve.
Yeah.
Living with someone, spending the weekends with them, going to bed together, to
Yeah.
waking up and working together, and it's you never get away from the person.
When you need a guy's night, I got you, bro. Poker night. We'll play some poker. We'll have too much whiskey. It'll be a good time.
So figuring out how we work well together
Gotcha.
and how we can kind of bounce ideas off of one another, and how I think the most difficult part is someone who has been doing this for years and years, trying to train someone who just started out, forgetting how much work it is and all of the steps that I had to go through and all of the challenges. So I think my patience are very short sometimes because I'm comparing it to where I'm at now to like, why isn't this just common sense? And it takes a lot of time to get there.
Yep. Yeah.
Just hit him in the head. He'll be fine.
Yeah.
Patience is a virtue. As somebody who owns a music school and has, taught a lot, and I interview a lot of great musicians, and most of them are not teachers. It's a whole different skill set to break that down and be like, oh, that's right. Here's how you, prospect. Or I don't even know what it is involved on being a lender, but it must be a lot.
Totally. And for me, as I said, I'm a PA. So I feel like a strength of mine is like educating, right? Patience and things like that. So for me, I get frustrated. Like, how do you not know how to put yourself in my shoes and like break this down for me, right?
Yeah.
So I think, we still struggle here and there.
Sure.
Of course, we're only 6 months into it, but we're definitely getting better and better.
We're getting the rhythm down now, finally.
Yeah.
That's great.
So for that's good. That's good background. So people, any couples who want to, do stuff together.
Don't do it.
Yeah.
No.
Rewind and listen to that and see, if it's worth it. You might lose your relationship. But the stuff I wanted to tackle today was, I know Ryan is a lender, and I am very curious to know Ryan's story, how you went from making, I don't know, $5,000 a month to like making that in a week, or even much more than that, right?
Like a day.
That in a day, right? It's probably made it right while driving here. So that story, and I think that'll be very useful for our listeners. And also the second one is we can go more deep into lending and what people need to get qualified and all that good stuff. So that'll be really good too.
Gotcha. So how I got started. I started out as a junior loan officer, and you make peanuts, and then the government takes the rest in taxes.
Yeah.
So it's probably worse than minimum wage starting out. No, not really, but it feels like it. I started out. Actually, there's a gentleman who Devin. I can't remember his last name. It's escaping me, but Devin, he unfortunately passed away a couple of years ago, but super helpful guy. Had a few phone calls with him, and he was explaining to me how to start out, because I didn't know anything. I read a few books, and my head was still in a whirlwind. It was the grassroots approach. So I would go out every single weekend, make it a point, Saturday, Sunday, hit open houses, run into realtors, and I don't know anything about anything. So every question, as advanced or as simple as it was, my response was, that's a great question. Let me get your card and I'll email you. Let me just confirm the answer.
Wow.
And then I just knew, like, I'm going to sound like an idiot up until the point I'm going to sound less like an idiot. But I'm going to keep doing this because I'm not going back to my old job. I didn't hate it, but it was a dead-end job.
What was it?
I worked for a manufacturing company. We manufactured an oil absorbent. So my position was, I was the person that I had to get in contact with the category buyer. So the person that put together all of the planograms for the store. And for those of you that don't know, a planogram is like, if you go into Home Depot, for example, it's a roadmap of where every single product is on every single shelf in every store. So not only did I have to try to figure out who the category buyer was, they're rotating them usually every 2-3 years or so people can't give them kickbacks and try to like grease their pockets to stay on the shelf or buy a position on the shelf. You got to figure out who they are, try to call the secretary at Home Depot corporate, as an example, 1,500 times until you get a phone number or email address, and then find out that they're not interviewing for their planogram or for their category for another 6 months. And then once they do interview, you've got to book a flight, book a hotel, hope that they like what you're selling when you get there, and if not, it was all for nothing.
Wow.
So I think that tenacity of a long, strenuous sales cycle is what helped me realize, like, hey, if I can do this, is a hell of a lot easier than a 6-month, 12-month sales cycle. So backtracking to what I was talking about before, I started out hitting open houses. So I would try to make it a point to hit 15 to 20 on a Saturday, 15 to 20 on a Sunday, collect all of the business cards, write down any notes I had on that person, and that was going to be my group of people that I'm going to harass for the next 2 weeks until...
So you're just doing lead generation?
Yeah, just off of realtors.
Prospecting.
Yeah, and at that time, that would have been probably summer of 16. It was not a super hot market at that time.
Yeah.
I would walk into the open house. It's 2 o'clock. The open house started at 11. I was the one and only person who walked into that entire open house.
Oh, wow.
It's a way different market.
The opposite of today.
Yeah. So the nice part was when I finally did walk in, they hadn't talked to anybody for the last 3 hours, so they're excited that somebody came in to talk to them.
A person was in that
Yeah,
open
yeah.
house. So, that kind of worked out then, huh?
Because you can't just walk into offices. A lot of them are closed offices. And if you try to walk in there, the person at the front desk is going to stop you. You can't get to anybody.
Yeah.
So how do I get to them? They're sitting there at their open houses. They post the schedules online, who's going to be there. I can look up their production numbers. But it was a lot easier at the time. I haven't done that in several years now. But what I would do is I would just pick a few main streets. I lived in Chino Hills at the time. Pick a few main streets, drive up and down those main streets looking for the open house signs, and then follow them to the house.
That's awesome.
And it probably took me about 2 to 3 months just to get one person to say yes, that they'll give me an opportunity. And it's difficult starting out, but the way you have to consider it is it's just being in the right place at the right time.
Right.
That at some point in time, their lender is going to drop the ball. And they only remember based on the last transaction. You could have 40 good transactions and you royally screw up the last one. That's what they remember you by. So trying to time it to where, and it's not even something you can time, but being in the right place at the right time, that their lender just made a mistake. They're now open to talking to somebody else, and you just happen to walk into that open house or happen to pick up the phone and call that person. So I could pretty much trace back most of my contacts to the first person that said yes and gave me an opportunity. And he knew I was brand new to it. But here's the thing, when his loan officer was super busy, he would call him and ask him a question, and he wouldn't hear back from the guy for 3-4 hours. But he knew if he called me, nobody else is calling me. I'm getting you an answer in 5 minutes. You're the only person calling you're the most important person that's calling my phone that day.
Wow, that's cool.
So he knew that I did not know anything, but anything he needed, I would drop. I wasn't doing anything, so I had nothing to drop what I was doing.
Right.
I would get him the answer right away.
That's awesome.
And so how long was this process going on? So, try to get like a few clients. So this was going on for a few months, years?
Probably 3 months.
Okay.
I would say 2 to 3 months before I got one realtor.
Okay.
And then what I did, that was actually out of the Keller Williams Chino Hills office. Then what I did was he gave me a deal. It should not have been a deal. And I remember sitting down with my operations manager trying to structure this thing. And after about half hour, he tells me it's not a deal. Like, what the hell? This is my only deal. This is this has gotta work. Yeah. So of course I never take no for an answer. Like, I will beat it until it's dead.
I like that.
I sat down and I figured out a way based on it appraising for higher than anybody would anticipate it to. And God willing, it did.
Oh, it did. Okay.
Because the ratios were so tight on this one. It was a cash out refi.
Yeah.
They needed to, in order for the DTI to be low enough, it needed to appraise. I couldn't tell you the amount, but it needed to appraise for a certain amount to give them enough extra cash to pay off the remaining debts that brought the DTI into qualifying range.
Yeah.
And it just happened to.
Wow.
So closed that one, and his other lender couldn't do it. So this was the first guy that gave me the chance. His other lender couldn't do it. He killed the deal.
Okay.
And here, I just got lucky, but he started sending me everything. I still work with him to this day. So
3 months to do that first deal?
Probably 3 months to make the contact to where he gave me an opportunity. About another month and a half before it actually closed and funded.
Yeah. So that's what I want the listeners to understand, right? So Ryan right now, he makes a lot of money. but he did take a lot of time in the beginning to. It's like the train, right? It takes a lot of potential energy to actually make it move.
Yeah.
But once so then I want to go. Did you have anything to add, Nicole?
No, I just want to, I guess just that, it's not just being at the right place at the right time, but also the consistency. Eventually it's going to pay off.
That's
You're
a good
showing
point.
up.
Yeah.
Not a lot of people will have the humility and the drive to do what 3 months of just like having no results.
Yeah.
Most people would have quit after like one.
Yeah.
And that's the thing. So my old branch manager, Tom, told me, expect to put in effort every single day for 6 months and nothing happen. And then all of a sudden it will.
Yeah.
It's like, all right, I'm halfway
You
there.
You had that mentor who kind of like prepared you for like, hey, you're going to eat a shit sandwich for a while. But just
and it was
learn to love it.
Like I knew for me there was no going. I was still working at my previous job at the time. It was commission only, which somehow the timing it got dropped off of my salary, but the commission was actually a little more than my salary. That was coming in up until the point it started when I started real estate. And then I left that company right when I started making money in real estate. So the timing couldn't have worked out any better. But I knew I didn't want to go back to that. And I was not going to work for $4 or $5 grand a month for there's nothing but being successful alone. It's like I'm going to do whatever the heck it takes at this point.
So you're now 3 months in, you've got your first client. So now are you trying to, do you even know at this point in your career that you need systems in place and all that stuff, or are you just trying to still figure it out, right?
I'm just trying to keep my head above water and figure out.
So how did you go from just a regular person just doing this? Because I know a lot of loan officers. Remember, we buy a bunch of houses. I've dealt with a lot of these loan officers. Nobody's doing what you're doing. So my question is, how did you go from that to a regular loan officer to a branch manager? You can make 10 times more.
So I'll backtrack to that first kind of referral partner that I met with.
Yeah, Devin.
I went into I started showing up at his office now because now I know him. I have a reason to go there. When I show up at his office, I'm passing my cards out to everybody, and I'm also asking him to introduce me to people he knows that could benefit. Yeah. So he introduced me to another realtor again, who I still work with to this day. Who he had a team that handled his buyers, probably about 5-6 agents. We still work with 2 of them to this day. One of them branched off, opened his own team, and he's got probably 5 or 6 realtors. Before he opened his own team, he also worked with another team who now has grown that team. So it's just been this like chain reaction to the first person I ever met. I can kind of go after I can kind of trace back to almost every single relationship. And I think a lot of the loan officers, they'll have a good month, make a ton of money, and slack off. So it's just been staying consistent, because the second the realtors and my referral partners can't rely on me, they're going to find someone that can. And I think that's kind of the kiss of death to a lot of these loan officers, is they have the opportunity to do the same thing, but where the ball gets dropped is they're out, they make a ton of money, so they go out to Vegas, they're going out on the weekends partying. Myself, I don't even drink. I'm in bed at 9:00 at night, and I'm up early handling business. So how I got to where I'm at right now was, I probably shouldn't say the company that I was with and the problems that it had at the time, right?
Maybe don't mention their name.
Okay.
Yeah.
All right. So the company that I started with,
Yeah.
it was good until about mid 2019. And then at that point, I noticed we were priced out of the market by about 1/8% It was a pretty competitive, from what I can remember, it was getting more and more competitive, because I think I could be kind of mixing up the timelines here. I'd have to look at the treasury yield, but I think 2019 the rates were, the margins were kind of being cinched, and the banks were feeling it and trying to push that cost onto the loan officers, which meant the margins were getting more compressed. So around 2019, we were priced out of the market. and the company at the time had decided, okay, we're going to lower your comp in order to be more competitive. So what it looked like during that time, in order for us to be competitive, was we were earning half to 1/3 per deal.
Mm-hmm.
So we're talking 75, 50 basis points per deal for every single deal we closed to compete with what every other lender was paying full comp.
Yeah.
So
usually it's 1.5 to 2 points,
yeah,
right?
correct,
Yeah.
correct. So we tolerated it for a little while. Then it happened again. Then it finally went back to normal. But that normal was, we're going to cut your basis points. I think it was by about 10 basis points.
So what were you making at this point? At this
150.
150
basis points.
No, like yearly.
Oh, in income?
Yeah.
Maybe around $250,000.
Okay, so you were already making pretty good at this point. Yeah. And then how did you go from making $5,000 a month to making, $20,000 a month?
Being consistent.
Just following up with people and all this stuff, right?
Okay. Because even when I started at this company, I was in a cubicle. I did not have an office. So I'm sitting there making phone calls and follow-up calls in the processors, like bullpen, basically, where the girls are yelling on the phones, people are yelling across the office. Every single day, I would lock myself in the storage cabinet where they kept like the paper towels, the tissue paper, that type of thing. I would lock myself in there. I would sit on a box with my computer on the floor and just bang out calls for 4 hours at a time.
Whatever it takes.
Yeah.
At this point, Ryan, did you have like Nicole and stuff under your team, or not Nicole, but other loan officers, or just processors and those?
No,
originators?
just one shared assistant.
Okay.
Yeah.
Just one shared assistant. So by yourself, you were able to just push in like 50 hours, 60 hours a week, and then you can make that much money.
Probably 80 to 100 hours a week.
Okay.
Yeah.
Wow.
Yeah.
That's a lot of hours.
And so then kind of going back to 2019,
Mm-hmm.
it started happening again. We're priced out of the market. We got to make half to 1/3 of what we were making. But the fix was, we're going to permanently reduce your basis points. And at this point, there were some other things that had happened that I won't go into details, that I had made a decision to start interviewing other companies.
Mm-hmm.
And one of them I was looking at and I actually interviewed with was a really heavy hitter out in Temecula.
Mm-hmm.
It would have been an amazing opportunity. Even to this day, I'm kind of like, maybe I should have gone for that, just because this guy really knows his stuff. But Temecula, I don't know anything about it. I'm not going to move to Temecula. There's no way in hell I'm driving there. And in order to be successful in an office, you got to be president.
Mm-hmm.
So I happened to get a call probably a week later from a recruiter.
Mm-hmm.
And I either just hang up or blow him off. And he called me, right place, right time. And I told him that I have a lot of people calling me, a lot of people interested in recruiting me. The only way that I'm going to come over is for an advancement in my position. There's no way I'm just doing a lateral movement. If you can make that happen, then I'll do it. At first they couldn't. The more you start ignoring them, the more desperate they get.
Mm-hmm.
So I would ignore their calls for like a week, 2 weeks, not necessarily on purpose, but it goes back to what I was saying, that if it's just a lateral movement, I'm not interested. So the more difficult I was to reach, the more kind of aggressive they became. So I talked to a few other branch managers and asked them what I should ask for in my agreement and in my contract, and went with what they were saying, but kind of threw some other things in there that were a little bit much. Because what's the worst that can happen? Then I just find another bank, and they actually went for it. So gave me an opportunity to run my own office. Didn't go well at first. Lost. I had LOs that worked for me, quit, and then I'm getting really frustrated because is it something I'm doing? Is it something the company? And I think it was a mixture of both. It's still definitely a challenge, but getting the hang of it. I've probably got about maybe 12, 14 loan officers that work for me now, and about 4 assistants. I got a we keep adding people every single week, so I'm losing count.
Mm-hmm.
But it's when you manage an office, there's a lot of responsibility that comes with it. You got to, not only am I responsible for my own production, but I'm responsible for what everybody else is doing, responsible for everything, even making sure there's supplies in there, making sure the IT is all set up, making sure everybody's got their computer screens. There's everything that comes that goes with it, and making sure that their files are closing. That if they run into a problem, I've got to pause everything I'm doing on my own files, no matter how crucial, and make sure theirs are closing. But you earn a certain amount off of each person that works for you. So that was really what allowed me to kind of step up to that next level.
You having a good team set up?
Yeah.
It's all about the team.
Nicole, is he bullshitting us, or is this true?
No,
Does he even
it's
have
all
an
true.
office?
Does he even have an office? I know.
Works
I
out of
wondered
the
same
basement.
thing,
Yeah.
though.
We just got our new office, actually.
Oh yeah, I need to come
So-
check it out in Irvine, right?
In
Yeah.
Irvine, right by
Beautiful.
Equinox, the bigger Equinox. I think there's two. So we got the furniture delivered Friday, installed Saturday. Have all the IT set up.
Mm-hmm.
Got all the locks rekeyed, all the parking permits, all the stuff that you don't really realize goes into making sure everybody's got what they need.
Yeah.
And now the docking stations, the printer, the computer screens, mouse, keyboard, toilet paper, all of that stuff.
Yeah.
The coffee machine, and
So Nicole, so I wanted to chat. That's very interesting. I'll come back to you. Do you have any questions to follow up?
No, keep going.
Yeah. So I wanted to ask you. So we now know Ryan's journey, right? It's a very steep. Like if you do this mathematically, they call it the slope is really high, which is like the curve is like this, right? Instead
Right.
of like a stair step, right?
Right.
So that's interesting. So where would you say that you are on this journey? So this is very new to you, right? Because you wanted to do more on the realtor side, and then you met him, and then you kind of got
Into
interested.
the dark side.
Yeah, on the lending side. You know.
Yeah,
You know, you can make up to 6 points on when you close a house
I know.
instead of 1.5, like Ryan.
Yeah, but you know, his like comeback for that is like, well, you can like have a lot of deals at once, and I think
Yeah,
for
exactly.
realtors, it's maybe harder to focus on, you know, like 30 deals in 1 month, right?
Unless you
Yeah.
have the team. You know,
What was
which
that?
is- unless you have a team, which is what I'm hoping to move up to.
Okay,
Yeah.
that's cool.
It's all
That's
about
good
the
to know.
team.
See,
yeah.
but yeah, I think it's a little bumpier for me. I'm not sure if that's true or not, but you know, I'm working part-time still, so it's definitely like a slower transition. We're dealing with COVID right now, so we weren't, you know, in an office, and I think that makes it kind of a little bit harder to keep your motivation up and be with a team. Almost like going to the gym, you know, it's always harder to work out by
Yeah.
yourself than when you're in the environment of
Yeah.
other people working out around you. So I think that for me has kind of been a little bit harder, but I'm still doing okay. You know, still always have something to work on. So
You know what's a blessing though is like, you know, you obviously have it, you know, obviously you guys are getting married, so it's a little bit different, but it's a mentor.
yeah,
You
for
know,
sure.
like the fact that he's learned all these things, he's gone through the gamut and paid his dues. I mean, you are in no better position than right now. Like the fact that he wants your success, is invested in your success,
yeah,
and
no,
he has all the
totally.
resources you ever want.
It's great.
You put in half the time he did on a daily basis, you'll get to that same point. How cool is that?
Yeah, it is. It is really cool,
You
and
know?
it's cool because we have a really great team right now. So
Yeah.
you know, a lot of times he's busy doing just manager stuff, putting
Right.
out fires, things like that.
Yeah.
Dealing with complaints or whatever. So when he's busy with that, I also have an additional mentor
Nice.
who's really, really nice, really awesome, and a great teacher too.
You have two
So,
mentors.
I
You
know, I have two
all the
mentors. I'm so
resources.
spoiled. Yeah.
You know, I was just talking to Olga actually today. And,
Oh yeah, she just left the management. side
Yeah,
and went
she
into
yeah
the
she just
office.
joined
Yeah.
Keller. So I was just giving her some tips and stuff, and was telling her how I'm working with Nasheen. And Nasheen, if you're listening, you're a gangster. I was just bragging about Nasheen. She's just good at what she does.
She's good.
And I'm blessed that she's my mentor and teammate, and so I'm hustling. I know next to nothing. So I'm just like hustling hard. I don't mind bringing coffees like I did the other day. Like any way I can provide value so I can soak up that knowledge and just be in that room and learn what I got to learn and get involved in the deals as much as possible. Because I'm trying to do the same thing, you
Yeah.
know, and just bring myself up
Yeah.
very, very quickly. And so I have a successful music school. And I could have had that like 10 years ago had I just been humble and just call some owners and just ask for, hey, like I kind of want to do this thing.
Yeah.
This is what I have, and just at least risk getting told no and
Yeah.
grinding for 3 months, you know, like you did. I wish I would have done that. I didn't
Yeah.
do that. I
Yeah.
don't know why.
Yeah.
You know, so you're in such a perfect position, and that's that's a talking point, on its own. But I mean, just
Right.
for success, it's about knowledge, mentorship, and just hustle. You got to have what he has, though. More than anything, I've offered my mentorship to other people who are wanting to either start a business or get involved in real estate. And I always say, well, first you got to find your why.
Yeah.
Like, do you really want this? Because for everything, it's always like the train analogy. It just takes a
everything,
lot to
right?
get moving. No one's going to take
Totally.
you seriously at first. So
Yeah.
for anyone listening, that's the secret to everything. It's so simple,
Yeah.
He's
Also-
too nice. He offers mentorship to everyone.
I do.
I'm like, they're all losers. What
I
are you
really
even
do,
talking about?
yeah.
I'm just like, they shouldn't even make eye contact with me.
And I'm always seeking mentors myself. And I found that most of them are just super, well, they can see that I'm already grinding. So that's always the easiest part. It's when they see you already on your way,
Yes.
I was just talking with the owner of my business. He's next door. And we're expanding the school. We're adding more rooms. And not to make this about me, but kind of on this subject.
Sure.
We were just chatting, and we kind of just got into this flow of just talking about business. And he's like, oh, like, you asked my age. And he's like, I started my business when I was your age, and it's so exciting. You got all this energy, and things are going well. And I'm like, yeah. And he said something about, because I was saying, well, I'm hoping to squeeze out some more profit. It's not as profitable as I'm hoping, so I'm always trying to figure out a way. And I was telling him, well, we're going to be on a waiting list at the end of this month, and so I need these rooms to be done. He's never excited to see me anymore because I'm always like, hey, what's going on? And so half of his staff has got COVID, so that's why. I'm still just like knocking on the door, just checking in. Anyways, point is, but to circle it all back and to wrap the point, he said, oh, you should just raise your prices. You're going to have raise your prices. And because I just raised my prices, I was like, yeah, I'm going to and so literally 2 hours ago, I told my administrative assistant, instead of a regular registration fee, we're going to do a membership fee. So it's an annual thing. And we're going to bring everything up, and everything just went up for any new students, any incoming students.
Yeah.
And of course, like, that's simple economics. And it just took him to kind of like throw that at me. And it was like, oh yeah, I don't know why I'm not doing that, And so having that mentor, even that was an accidental mentorship.
Yeah.
He's not even in the same industry, but that he just threw that at me, and I was just like, yep,
How useful.
yeah, exactly.
Inflation is 7%, so.
Yeah,
Yeah.
you got to keep
Gotta
up.
Make
raise
sure
it
you're
by
charging
7%
at least
at
that.
least.
Yeah,
Mhm.
right. Yeah.
Treasury yields are going through the roof too.
He's getting it all back because I'm paying him rent.
Hey, Nicole, I want to ask you.
Yeah.
So you started. This is a new business for you, and I do see like your Instagram like ads and stuff. Not really ads, but your posts.
Yeah.
Do you see any clients from that or?
I see more. I see some like potential leads.
Mhm.
People that aren't necessarily ready to buy right now, but they'll message me and like, "Hey, this is my situation. What can I do?"
Mm-hmm.
So I offer them advice. And I definitely notice it actually helps like my realtors even like reach out to me and just kind of stay top of mind for them a little bit more.
Yeah,
so
you
it does
just-
bring me
Yep.
something.
Yeah, you just keep the flow going, so
Yep.
they keep seeing you all
Yeah.
the time,
So you
right?
Yeah,
keep
so
top of
just
mind
don't
when they
forget
need
about
that
me.
job.
Yeah.
Yeah.
That's
That's
super
good.
smart,
Yeah.
especially for starting like and just not really having any traction.
Yeah.
Mhm.
Video content is huge.
It is huge.
Yeah.
And I feel like it's something I want to be, better at. I told you about my rinky dinky YouTube. There's like 3 little commercials on there right now.
Oh, really?
great.
But I want to get better at that and kind of push myself
Yeah.
to grow because I know it has a lot of value.
No,
Yep.
the IG posts are good. I read them. I know almost as much as Ryan because that's how I annoy him every day. I'm just like, what do you mean? 10% brings the PMI point.
I know. I hear you guys talking.
Yeah.
You sound like 2 lenders.
Yeah, I know.
Totally.
I am the worst probably client, but also pretty fun because I could if he says something I can understand, right?
Yeah.
So, but
that's true.
for so you do post really good posts with material in them. So, do you make those posts or do you have hired it out to someone?
No, I make them.
Oh, really? You
Yeah.
sit and write all of those stuff?
I write all of it.
Wow,
Yeah.
that's cool.
Isn't it?
I thought you just hired out some VA in Vietnam and
No.
Eventually, you'll have
probably
to.
India is just like do it, bro.
Yeah, that's
No,
great.
and
DIY.
it's funny. Those posts used to take me like 2 hours, and now
Mm-hmm.
because I'm being more consistent about it, it's taken me maybe like 20 minutes now. So
That's
that
cool.
just goes to show.
You get a system.
Any post you see, I'm not doing it. Probably Drew's.
Oh, really?
all the
Yeah, I'm
posts
doing
and
all
all
that
that
Okay.
stuff.
Yeah.
And I don't know nothing about Instagram.
Yeah.
Unless it's
It
a
takes-
video
there's
about
a learning
numbers.
curve
Yeah.
for sure. Yeah.
Yeah.
Yeah. That's why we're doing this. Our boy Evan is, did all this for us and hooked us all up.
I know. It's so nice.
Yeah. It's nice to sit and just like go. you know.
For sure.
For the first few, you know, it was me like figuring out the angle and the
Yeah,
camera and this whole
It was pretty
thing.
good. I mean,
It was good.
yeah.
Yeah. It was a good setup for sure, but it was just
This
it
is
was a
better for
lot of
him.
work and then tear down. So
So the next part of the conversation, you know, I wanted to give the listeners a little like a motivation with you guys, and especially Ryan too, with how far he's climbed really fast. I like that. I like meeting people like that who are very inspirational. But next, you know, I want to get into because this podcast is about real assets, right? It's already, and social is just conversations about, you know, future and stuff. So I wanted to get more into lending, and then let's break it down for the listeners to see, okay, well, I want to buy a house. I want to buy an investment house. It's 1, 2, 3, 4 doors. What does one has to do? Like, what do we have to do? Like, do I need a job? Like, are we doing, you know, fog and mirror loans anymore? Is that done with 2008?
We can do it without a job now.
Oh, you can do that? They're
Yeah.
coming back down now?
They have the private money stated programs.
Okay. But they
Anywhere
usually
from-
pay like a point or 2 points higher than...
Yeah, it's 20% down minimum up to
Mhm.
3 million, if I remember correctly. Interest rate is not bad, 4.6 to 5.7%.
Mm-hmm.
They need 6 to 12 months reserves,
Okay.
and they don't verify income in any way, shape, or form.
Okay, so that's for more advanced people. Let's break it
Yeah.
down to like the normal American guy who's
Yeah.
making $60,000 a year. He's a manager at Target. What is he going to do? What does he need to do?
We need a FICO score.
Mm-hmm. What is that?
It's your 3 credit scores.
Mm-hmm.
So we throw out the high score, throw out the low score, use the middle score.
Okay.
And need 2 years consistent work history. That doesn't mean you have to keep the same job for 2 years.
Mm-hmm.
It just has to make sense. If you go work an office job, then you're going to start off working a trade, then go work in a sales position, then you're working at Target. Then if you're jumping all over the map, and anybody who looks at it realistically can agree that it's inconsistent,
Mm-hmm.
that's what they're going to dock you on. But they allow you to change industries. They allow you to change jobs. It's just got to make sense.
Mm-hmm.
So on top of that, we need 1 month pay stubs, 2 years W-2s, 2 months bank statements,
Mm-hmm.
and they have to be able to source any large deposits. So we'll get clients sometimes that they don't like using banks. They'll
Mhm.
have 50 grand in a safe at their house. You can't just put that money in the bank or think you're going to bring 50 grand to the escrow company and then use that money.
We tried that with Drew. It didn't work out.
I literally had a
Yeah.
bunch of money in a safe.
Did you really?
Yes.
Yeah.
Oh, wow.
For our first deal, I'm like
Yeah.
pulling it all out. I'm like carrying him like to the bank,
And you thought you think he's worse? K1 is even worse. He gives me money in bags.
Oh my gosh.
yeah. What about JK though? He was-
JK is even worse, guys.
JK is like a high income earner, like
like you.
self-made. Yeah,
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 and
and
he's just
he's
like-
crushing it. But he had like a bunch of cash, just like I don't know.
there. Still
Yeah.
probably under his mattress.
Yeah.
What's his address?
All right.
123 Main Street.
yeah, it's funny.
Yeah,
But-
all of our, we have interesting people. But Steve, if you're listening, damn, send the freaking W-2 and the 2 months bank statement. We're waiting on you for 2 weeks now. Yeah.
yeah.
But that's cool. Okay, so for people who don't know, how do you improve your FICO score? Should I go get 2 more cars? Because I heard on the news that, you know, a new car will improve your credit line. Is that true or not true?
So not true.
Okay.
It will, but
Yeah.
not in the immediacy. You're going to drop some points,
Yeah.
and then you're going to recover them and kind of break even by around 3 months. Then over the next several months, it will start building your score, but it's going to be probably a year, 2 years before you start seeing an improvement. The fastest way is credit utilization. If you are maxing out or kind of going over that 50% utilization on your credit cards, it's going to temporarily drop your score. So as soon as you pay them back down, you'll recover all of the points that you lost.
Yeah.
But the FICO is risk-based. So if you're maxing out credit cards, you're telling the bureaus that you don't have enough money to pay it without the credit cards. They're going to drop your score. So keeping the utilization down. Second thing is, and this is kind of a hack, the authorized user. So yeah,
I know someone who just did that.
yeah. If you have someone, let's say for example, the mom, she has Sears card. Are they even in business anymore?
Sears.
Yeah, I think
Okay.
so.
I think
Alright.
the South Coast
Very
Plaza one. I think that one shut down.
Yeah, it did.
Okay.
All right, let's use Sears as an example. If you have the mom has a Sears card that she's had for 10 years,
Mm-hmm.
there's 120 on-time payments on there.
Mm-hmm.
If she were to add her son as an authorized user, for example, it's going to copy that credit history over to the son. So those 120 payments will copy over to his credit.
Yeah.
It'll instantly boost his score.
Yeah.
So anywhere 30, 50 plus points.
Yeah.
And you do that on a few cards, you can have a really high score really quickly. I had a borrower one time. He was using a family member's social because he had an I-10,
Mm-hmm.
just got his citizenship, and finally got issued his own social. The family member's social was the FICO score was over a 700. When he wanted to look at homes, we can't use his family member's social and his ID and kind of mix and
Mhm.
match, right? So the wife was one of those that any store she walked into, if she was offered a credit card and she got a discount, she would sign up.
Mm-hmm.
She had cards that were 15, 20 years old, never used them but kept them open.
Mm-hmm.
So it's the perfect scenario you could think of.
Mm-hmm.
So we had her add her husband onto 5 cards.
Mm-hmm.
And I'm not making this up. I think the bureaus might have gotten a little bit smarter at this, and they don't give you as much benefit as they used to. But he had no FICO. There was nothing on his actual social. 3 weeks later, he was at a 770.
Wow.
About 6 months after we closed, we checked in with them. He got a Home Depot card of his own, and he was pretty low on his FICO.
Wow.
He was buying all kinds of tools and fun stuff. So.
Yeah, so I mean, so for the listeners who are listening, you know, I study this like a genius. I churn credit cards like nobody. The credit card companies hate me. They've been trying to collect $1 from me for the last 20 years. They have made nothing, right? I churn them around.
Tell the audience what churning credit cards.
So
what is
churning credit cards is like when you're poor like me and you go and buy 2 houses on a credit card, you need to make the payments at some point. But if you have enough history with the credit card companies, you could actually, you know, get a 0% on there, and then, you know, you can move it to another credit card, and you can do a balance transfer, and you can play this game for a long time. But it's a very dangerous game, and it's a very complex game. If you don't know what you're doing, you'll end up paying 25%, and then you will be homeless because, you know, and your credit will go to 0.
Yeah.
However, for me, my
Wow.
credit is like 800, and I have like a bunch of credit cards. You know, so it's interesting what you could do. So so the first one was we were talking about the credit card. So that's used to drive your credit score. But most of the things we talk about here is very long term, right? So what people don't understand is you can't just go open up a credit card and actually you know, hope to make that like an improvement for your score. So these are long-term investments. Like my credit card is from 2008. Guess when I came to the U.S. 2008, right? So that's I have like a 14-year history, you know. So if I add Drew to that credit card, he's going to get a 40-point bump immediately because they're going to be like, oh, Drew paid payments for 14 years, never missed a payment. His credit line is like $71,000, right?
It's crazy that's even a thing.
That is the
Yeah.
thing.
I
Yeah.
know.
Blows my mind a little bit.
I have a feeling it won't be for much longer.
Yeah, I wouldn't be
It's-
surprised.
Yeah.
But so that's one. You know, multiple credit lines is another one. So if they see you have multiple credit lines and you always pay, that's also good.
Yeah.
So let's get off the credit stuff. So that's one way to boost your credit score, right? So that's why do we want a higher credit score? Because you will get money for cheap. Like the higher the credit score, you can borrow at like high amounts. Like Drew and I, we have millions of dollars in debt and we pay about 3%. Which means that if you think you're smart saving your money, you are not very smart. You're super dumb because I borrowed all of your money at 3% and I'm buying houses and you're renting the houses I bought, right? So the game that we are playing is assets, and how I educate people is you want to do the things the Federal Reserve and the U.S. does, right? So you never want to bet against the dollar, or you never want to bet against the U.S. or the Federal Reserve, right? Because they will always win. So I just do what they're doing at a smaller scale. The U.S. borrows money like trillions of dollars, and then they devalue the dollar, right? And then they borrow more. So what this does is it makes the burden on the U.S. much less because they keep devaluing the dollar by printing more dollars, right? So I just figured out that's what we're going to do. We will borrow millions of dollars, and then the U.S. will just print more dollars and then devalue my dollars. Then I will pay with the new dollars, which are cheaper, but I borrowed like 5 years ago, right? So that's the same concept. So I just educate people how to get into this game.
So you're just outrunning inflation, basically.
Pretty much. So in this environment, debt is now an asset, which is crazy to believe. Like all of my debt is an asset I have.
Well, maybe explain a little bit about the difference between perhaps leveraged debt and like rotating debt. You know?
So, well, you can also say bad debt, good debt.
Yeah.
As well. So, leverage debt is something, you take, you put a down payment and, let's say I have $20. I go to Ryan. I'm like, hey, I need $80. The house is $100, right? So he's going to lend me on the $80. So that is the leverage because I am using Ryan Bank's dollars to buy my asset. That asset is going to pay me and then I can pay off the debt, right? So that's the leverage. That's also a positive debt or it's a good debt because I'm not really paying for it. Now, on the other hand, if I go buy 2 boats, that's a liability because that's
I'm
not
buying a
paying
boat
for it. Unless you rent that boat on tour and you make like hundreds of thousands of dollars, then it's different, right? So that's what Drew was asking about. But let's keep going on how to get a loan. So what else do we have to do, Ryan, other than the credit score? What else do you need?
You need the down payment.
You need the down payment. What if I don't have the down payment, like what we're doing right now? I have no money, but I'm buying $1 million house in Orange County. How is that possible?
So
you just know people with money.
Yeah.
That's it,
I
right?
didn't know how much you wanted me to say on the podcast, so
yeah.
I kind of sit quiet there. For the average person, let's say they have decent FICO score, decent income, like the majority of households, decent FICO score, decent income, but they're living paycheck to paycheck. They can afford a mortgage. But what they can't do and have difficulty do is making the transition from renting to shelling out $30,000, $40,000 down payment to buy a house. There's programs that will allow you to borrow. There's 2 types of programs. There's programs that will allow you to borrow the down payment and the closing costs, such as CalHFA. It's CalHFA. A majority of mortgage banks will do that program. You won't see your average bank like Chase, Wells Fargo, Bank of America. They'll typically never do the down payment assistance programs. They're higher risk, a little bit trickier borrowers, and those, let's face it, those big banks are making a ton of money alone just off of overdraft fees, let alone everything else that they've got going on.
How poor do you have to be to get those loans? Can I get it if I make $100K?
So there's maximum income limits per county. So this market's been, to be honest with everybody though, this market's been a little more difficult to get offers accepted with those programs.
Yeah, I was just gonna mention that.
Yeah.
So you have to disclose them?
What's that?
You have to disclose them on the contract, like when Drew writes the contract? You got to say, I am poor, I'm borrowing money from the government to put down?
I don't know if I'm supposed to give it the way we do it, but...
Okay.
It depends on what state you live in.
Okay. What about a super blue state? You can still do it. There's ways around it, huh?
There's definitely ways around it.
Okay.
But you typically have to show that you have the money. And then what's to say the client...
I know what you're saying. Okay.
What's to say the client didn't change their mind in escrow and decide they no longer want to use their money and still close on time and everybody's happy. So with those types of programs, though, it's very difficult in this market when they're getting 20 plus offers per home, some of them way over asking, some of them waiving a ton of almost all the contingencies, 20% down.
Sounds like you're pointing
buyers.
fingers at someone.
Pretty much everything Vince does.
Yeah.
So it's very difficult for those buyers because they're traditionally longer escrows. If they're doing down payment assistance, if there's an appraisal gap, there's no money there to cover it. And almost at the bare minimum, buyers are writing in the contract an appraisal gap. So those programs are available. CalHFA has consistently been one of the better ones. They allow you to borrow up to 103% of what the house is worth. CalHFA has fees that are involved. You can buy a home with a decent interest rate and come out of pocket $5,000 for the whole transaction.
Wow.
The money does have to be paid back. Typically, it's paid back through the equity. So what that means
Do
is...
they claim equity in your house?
No, they don't.
Oh, okay.
No. So
they're a pure lender.
Correct.
Okay.
So if they give you a loan for $30,000, you owe them $30,000 plus the down payment portion. I haven't checked it in a couple weeks, but last time I did check, down payment portion was accruing interest at 1%, simple interest. closing assistance portion was 0 interest.
Okay. Wow.
So
That's pretty nice.
Yeah, it's.
You have to make like 75 or less or something.
It depends on the county because I haven't done these in quite a while, probably since early 2020. That's when this madness started. We really got away from those. It just makes it very difficult for the realtors too, because they're running around all weekend long submitting 30 offers. Nobody's considering them, so the realtors are avoiding them. So we did these very frequently from the time I started in real estate until end of 2019.
Makes sense.
Yeah.
Just so that listeners understand what we're talking about like interesting programs different states offer to assist with down payment. Bank of America has one where they credit up to $17,500 if you are so much X below the median income or the properties in like some form of like a lower income area, right?
Yep.
But in today's environment, we are in January 2022. If you even open your mouth and say you're going to get some kind of assistance or FHA, your offer will immediately be burnt and thrown in the river. Like they won't even look at your face. Like it's a waste of time. Because if you call Drew, he's a realtor in California, and he say, hey, so I'm getting my down payment from Cal HAFA, and then it's going to be an FHA, and then my sister's uncle is going to give me the money for the down payment. He knows you're a waste of time.
A lot of listing agents on the MLS will put it, no FHAs, no VAs.
Yeah.
Straight up.
VAs are usually the easiest ones too.
Oh, are they really?
Yeah.
VAs, they're very complicated too, man, because they have a lot of rules too. They're like FHA, but 0 down.
Yeah.
Yeah.
A lot of red tape, I'm assuming. I mean, if you do an
a
FHA,
few
they're
other
going to go dock you
things.
on shipping paint and stuff, like ridiculous stuff like
Yeah,
that.
a few other things. I like them, though. There's no down payment, no PMI. The interest rate is stupid low on these programs.
Mm-hmm.
There's nothing really to it on the processing side and actually doing the loan.
Really?
Interesting.
And then the interest rates are so low. These guys are, and the payment's so low, we never get shopped on these programs.
Mm-hmm.
So, and it's typically guys who are high income earners, high FICO score. They've got plenty of money in the account. So they're high FICO, high income. And with VA, there's no loan limits. There's no debt to income ratios.
There's none?
There's none.
Wow.
Wow, I didn't know any of this.
Yeah.
Do we know any VAs we can partner with?
I know, right?
I know a couple guys, but yeah.
So there used to be an income. There used to be a loan limit, but they've since done away with them. They charge a little bit more on the interest on the point side, but it's still ridiculously low for VA because they pretty much only pay the closing cost. So I mean, I've gotten a DU approval on VA with a 72 back end, which is like 50% higher than what FHA will allow, for those of you that don't know.
If what he just said to you guys makes no sense, DU is desktop underwritten, and DTI means debt to income ratio, and back end means, you want to explain how back end ratios work?
Yeah, back end ratio, the formula takes the total house payment plus your monthly debts divided by your before tax income.
Yeah, and the front end is just
the house payment over income.
Yeah, so that's pretty good.
So those qualifying ratios are what the government uses to determine where the stopping points are for borrowers and the maximum they can afford.
Yeah. I mean, the key for listeners to understand is it gets really complex is you need to call someone, like call Ryan or call Nicole or whoever you want to call, and get started on this process if you're really thinking about buying assets and moving forward in life. Because you won't be able to pick all of this up in like listening to one episode, right? The whole concept is, learn what's happening and then try to figure out a way to put your name on title.
Yep. What's great is you really don't have to know a whole lot. You can rely on experts like you guys, which is nice. But it is step one. You want to know.
You want to know a little bit. If I call Ryan and Ryan says, "Yeah, the going rate is 7.2%." And it's 20 points to get started, I'll be like, maybe I'll look for another bank.
Sure.
So those kind of things
you
want
watch
to
the
know a little bit.
unscrupulous types.
Yeah. So it's not that I'm making a lot of money. I'm just doing about 2 loans a year and charging.
Right.
It's
the secret.
It's the Ryan from 2016. He will do anything to get that loan.
They're subprime.
Yeah. You'll probably do it for free back then, huh? Because you were just trying to get into the game, right?
I pretty much would.
Yeah.
Yeah. When I started out, I was maxing out credit cards right and left just to try to stay afloat because I was going to do anything to not have to continue with my previous job.
Yeah. So it's really, interesting thing about, since we have the lenders here, it's good to know is interesting thing I've learned over the years is your credit score is, and, these things kind of like educate you when you want to buy assets, like to figure out your life really. Like if you don't have everything figured out, if you go to a loan officer, they'll tell you you messed up. Like your life is not good, bro. You need to
Your
figure
life is
this
not
out.
good.
It's like you have 70% debt to income ratio. What are you even doing coming here? So then you can maybe go get another job. Maybe maybe you should stop eating at Whole Foods every day when you're working at Walmart. So different things you'd learn.
Did we actually mention the DTI thing? Because that's part of it as well. Did we talk about that?
Yeah, so DTI is debt to income. I'll make Ryan explain it more. But it's pretty much like how much money you make and then, how much debt you have, right? So that's literally what it is, debt to income. So if you have a lot of debts every month, like you have a lot of credit card payments, you're not going to be able to get a loan. And as far as I know, it's pretty much caps out at 50%. Over 45 people don't like it already, the lenders, right? So if you make $1,000, the max loan you can get is $500 a month, right? Is that accurate?
If you make over how much?
If your monthly income is $1,000 and then you have no debt, the best loan you will give is $500.
Correct.
Right,
Yeah.
So that's pretty much debt to income.
Yeah.
So you want to have all your debts as low as possible, the income as high as possible.
Correct. And to kind of put it in perspective, every $100,000 you borrow, your payment's about $600 a month. So $500,000 is
At what rate though?
It's changed a little, so we're getting used to the newer.
Yeah.
It's probably about $650 per month now, but we'll still use that because it keeps the math a lot simpler.
Yeah.
So every $100,000, about $600 a month. So $500,000 home is about $3,000 mortgage. You need to earn twice that before taxes, so about $6,000 a month in order to qualify for that mortgage. If the house is $600,000, payments $36,000, you need to earn $72,000. If you have debts, that's going to skew the numbers a little bit, but kind of gives you a ballpark to shoot for. And every $1 worth of debt is going to wipe out about $2 worth of income.
So Ryan, so for the listeners, so I'm buying a house. I don't know if I'm going to close. Hopefully I do. My PITI, principal, interest, taxes, and insurance is going to be about $6,000 a month, but I don't make $12,000 a month. So what is happening there? How am I getting that loan?
Cosigner.
So that's another key, guys. So you can actually have your sister, your mom, your brother-in-law, Drew, Ryan, anybody could cosign, so that's also another important thing that you could know. There's a lot of pros and cons. If you do a lot of co-signing, your debt to income gets hit too, so you can't buy as many houses. So, that's another portion. So, that's another thing to think about.
Although after one thing I want to add is that after 12 months, if you are a co-signer, after 12 months, that debt is no longer considered your debt. It no longer is a hit against your DTI, as long as you're not occupying the property. Somebody else is making the mortgage payment out of their account. It's never been late and it's never been in forbearance. So you need that 12 months consistent payment history that with no break in it. So that was the problem too when it came to co-signers and refinances, is when people would go into forbearance, you lose that 12-month history. So now you can't, if they were a co-signer and let's say the person they co-signed for was in forbearance, you lose that 12 months history. So now you have to hit the co-signer with that house payment.
Wow.
So if they were trying to refi their own house, they couldn't because they had co-signed.
What
with
about
somebody else.
forbearance and then you wait for 12 months, then you're good?
Well, now they've actually changed it. You needed, I'm 95% certain on this one. I had just actually emailed on this scenario. Is as long as they had the 12 months consistent before they went into forbearance, then they're okay.
Okay. Yeah, so that's, forbearance was a hot topic. We had the option, Drew and I, of taking forbearance because California is super awesome. They tell the tenants don't pay, but we have to pay property taxes, right? So it's very interesting. But we had the option of taking forbearance. The reason I didn't take forbearance is I would lose my capability to buy new loans. And I went aggressive and we bought a lot of houses during the pandemic. So we ate it. Drew and I covered the mortgages when the tenants didn't pay. but we were able to constantly keep buying, either on his name or my name or my sister's name. So that's the option. So every time you take a handout from the government, you think it's good, but it usually, unless you really have to, you lost your job, we still take, take it and then, pay it back later. But if you don't have to, don't do it, because it never helps. It never helps that person. Like even when, they were paying people $600 extra and then all the unemployment, all over the place, right? So what happens is, what do you think the person does when they get the unemployment? What is the first thing you would do, Ryan, when you get unemployment? What would you do with that money?
What would I do with that money?
Yeah,
He's probably the wrong person to ask.
Yeah. What would you do?
I think the average person, let's just say, what do we think the average person would do?
The average person is going to pay rent, right? When he gets the unemployment money.
Mm-hmm.
Who owns that building? Right? I own that building.
Mm-hmm.
So no matter how much money you give poor people, they will always give it back to people who own assets. So it doesn't matter. I could literally print billions of dollars and give it to all the poor people. You know what will happen? They'll raise the taxes and inflation will go up and they'll get more poorer, and I'll own all the assets.
Right.
So unless you own assets in this country, you're going to get wiped out. Doesn't matter how much money anybody's giving you. There's a guy who's a Section 8 tenant for us in Bakersfield. He's been there for 15 years. He'll probably be there forever. Pretty decent tenant. He'll live there. He pays rent, whatever his portion. But that's all he'll ever do. He gets that little paycheck every month from the government, keeps him tied to that one property.
Yeah. They're always on time.
They're always on time, but for that person itself. So is that really helping him? I'll give you a little bit of history lesson. Is my dad, he lived in a town in South India, and he had a lot of brothers. But growing up, my dad decided, he's going to go to the big city. He didn't want anything to do with that little town, right? So he left everything he had, and then he went to a major town. He took a huge risk. He bought some assets there and stuff. But it's some of the people who stayed there, they wanted the house or the car or the bike. They thought that's all life is, and then they got, tied to that little property. You don't take a risk, and it does nothing. Like we have tenants who don't pay, but the biggest achievement in life is they didn't pay rent for a year, right? It doesn't really serve
Some
you.
animosity there still.
Yeah, he's voicing his frustration.
Yeah. No, but
it's been a year of interesting.
But
tenants.
it's not really my frustration too. I'm talking about it from the point of the tenant. It's not really serving. I'm saying if you take money, like we could have taken forbearance, right?
Mm-hmm.
We had the opportunity. We could have. I think if you took forbearance for 2021, we would have made $100,000.
Yeah.
In just but
all they're going to do is tack that onto the back of your loan.
But we won't have any more assets. I can't
Right.
buy in. Like like what you were saying, right? If you do the forbearance, they won't give you they'll look at it as they can't take it out and all that stuff. Very interesting.
Correct.
Yeah.
They came on pretty hard with some of the guidelines on the forbearance because it was uncharted territory with lending.
Yeah.
The more time that's gone on, the more they've kind of relaxed on how much it affects people.
Yeah. We could have taken forbearance on mom's keys.
Hypothetically, what if we did forbearance on just? So you'd have to do forbearance on how many properties would we have at that point?
I don't know. Probably
Well, where I'm going with this, let's just say they're all on you at that time,
Yeah.
and then you filed for forbearance.
Mm-hmm.
Could I do a loan?
Yeah, you could do it.
So that, you know.
that's what I'm saying. So we could have done forbearance
Yeah.
on mom,
Mhm.
right?
Yeah.
And, she has
And
a
then-
loan. I mean, that's like $40,000 a year, that loan, right?
Right.
And she ain't buying another house.
Right.
She's
right.
retired.
Yep.
Let her credit go to zero. Who cares, right? And then now we have the $40,000.
Yeah.
Yeah, we could have done that.
Yeah. That's a play. Interesting.
But if you're signed on your mom's, then you can't exclude that liability showing she's paying for it.
But he's not on the loan. He's only on title. I'm on title too.
Gotcha.
Yeah.
Okay.
So
Then
if
you're
you do a
fine.
credit check, we won't come up.
Yeah.
We'll only
Right.
pull up on the asset.
Gotcha.
Yeah.
Then you'd be fine.
Yeah,
Yeah.
you'll be fine.
Yeah.
Never
Yeah.
too late.
Well, I'm glad we did it the way
Yeah.
we did it. You
Yeah.
know, we ate some shit sandwiches, but
Yeah.
we came out. Things are coming back. We're finally getting checks from back rents and stuff.
We got a rental relief check from California actually, and they paid 6 months back rents for one of our tenants.
Wow.
Yeah.
Yeah.
When I saw that, I was like, "Oh, this is for real." Because I was just like, it was like thinking something like was gonna show up forever and ever, and it's just like after enough time, you're just like, "Yeah, it's fine. It's not gonna happen."
As long as you can cover the debt service for a while, and if you have
Yeah.
the reserves for it, I mean, we always say, do that.
Right.
You should be fine.
There was actually that new FHA program that was just released today.
Yeah,
You see that
zero
one I sent
down.
you?
Have you heard that? There's a zero
No.
down FHA.
It's the
No.
FHA 100 down loan program. So it's when the previous owners had financed properties with FHA insured loans. They were foreclosed upon. Now the house is owned by HUD. They'll allow the new owner to do $100 down payment.
Wow.
Let's do it. We got to occupy it?
Yeah.
Yeah.
FHA. Yeah.
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 It's an FHA program, so the new buyer also would be FHA.
Okay.
I'm gonna hunt for those deals for myself, man.
Yeah.
No.
This New Hope doesn't
Ready
work
go
out.
for that, foreclosure.com? No, that's actually a real site.
Is it
guys.
foreclosure?
Yeah.
Was it really?
That's a real site.
Yeah.
Wow.
So they're HUD-owned homes.
Interesting.
I wonder the fight for that. Hey, we're all zero downs.
Yeah, but in this market though, it's
It's gonna be a
still
bloodbath.
you're gonna be
So-
at the bottom of the stack of offers.
So,
though.
like a closing stuff, I want to say, let's say I'm a new guy. I don't have any homes, but I want to, throw in my towel and try to get a home. What can they do to get that offer accepted? What can you do? Can you write them something? Is that like a thing that's attested by you that they can go and show?
Yeah, so we'll submit to the listing agent a copy of the DU. It's an internal document that tells kind of the risk factor in 6 to 8 pages on the loan.
Mm-hmm.
All listing agents want to see that. It qualifies you based on credit, income, that type of thing. So we give that to the agent that they're working with, as well as a pre-approval letter. Honestly, what's helped myself and our realtor partners in this market to get offers accepted is the communication. The squeaky wheel gets the oil.
Mm-hmm.
So we're calling them, emailing them, texting them, not being overbearing, but letting them know that we're here.
Mm-hmm.
Because they're seeing that if we're this responsive and we're this hungry for it before we're even in escrow, we're going to be very easy to communicate with and get a hold of during the process. There's a lot of agents and a lot of lenders that they'll get into escrow with, and you can't reach anybody, you can't get a hold of anybody.
Mm-hmm.
And it's very difficult to get anything done. So that's consistently, my agents used to show up at the listing agent's office with coffee, with donuts, hand the offer in person
Wow.
to get the offers accepted. And sometimes, and not naming names, but the agents would throw my agent a bone.
Mm-hmm.
And hey, you're not the highest, but I really like the way that you work.
Mm-hmm. Yeah.
Can your buyer do this amount and we got a deal?
Yeah.
So much of everything is likability. You know?
Yeah.
That's literally how I do all the deals.
Yeah.
I just call them, try to make a connection if I can,
Yeah.
and then squeeze, the deal in. Like, I'll try to find out what I can, and then find out what they're offering, and then just also offer $100,000 over. Then that's also a technique.
Offer $250,000
That'll
over,
always clinch the deal for sure.
and then a $50 appraisal gap.
The interesting thing that people don't realize is what I've noticed is a lot of people value like the paper dollar a lot. So when they make offers, they get really tight. They're like, I don't want to pay, like this much over this and that. I'm like, who cares? Like my sister, right? She lives in Georgia, and I love her, and she's like our biggest investor.
Mm-hmm.
When she's going out to look at the deal, and she's like, "Oh, it's 600. We don't want to pay anything over 623.5." I'm like, "Who came up with that number? Like, why did you have that number, right?" I'm like, "I'm offering 200 over with your money." So it's like people value money differently, right? So I don't value it at all.
Maybe just, and I'm gonna try to wrap here pretty soon, but maybe explain to the audience why you're okay with that.
So why I'm okay with it is I understand how the money process works, how the printing works, and how inflation works, right? To me, money is useless, right? As long as you have your debts covered, you can pay your bills, and you can do the stuff, right? So if I'm let's say for example, I'm buying a house. It's hypothetically speaking, it's $1 million, and let's say hypothetically speaking, I overpay by $250,000, right? So if I can pay all of the bills at $250,000, and then the property value will go up, does it matter that I'm paying $250,000 over asking, right?
Sure.
What if it's
Only if you want to sell it right away.
Well, yeah, only if
Right.
I want to sell it, right? So I'm going to live in it for a long time. It doesn't really matter,
Time is on your
No.
side.
right? So that's what's
Yep.
interesting. As long as you can, cover the debts and you can get, enough money coming in to pay these things. If you're looking at a long term, these assets prices always go up, even if it goes down. Even if it goes down, it'll always come back up, right?
Mm-hmm.
I always tell people the worst time to buy real estate was 2006, I think.
I've used that line a lot, by the way.
Oh, really?
Yeah.
2006,
Yeah.
2007. I think the average median price of home, not average, median price of homes in the United States was about $250,000. That was the worst time you could buy because we had a huge crash after that, right?
Mm-hmm.
Right now it's close to $400,000.
Yeah.
Which means if you timed the worst time ever and you bought it at the worst time ever, you were still up by almost 100%.
As long as you can cover the expenses.
As long as you can cover
Yeah.
the expenses, everybody who
Yep.
fire sold it,
Yeah. And I get that as a realtor a lot, where people are like, oh well, the bubble's gonna burst, I'm gonna wait, and I'm like, man, that I got a lot of experts that are smarter than I that are not saying that. They're saying
It's
Yeah.
gone up 30% just since the pandemic. So which
Yep.
means if we have $3 million of real estate, which we have more than that, that's
Mhm.
30%, that's
Yep.
$1 million
Mm-hmm.
we just made.
And I tell the clients the same thing, that even if let's say you buy a home, the market does dip a little bit,
Mm-hmm.
your rent is still going to go up.
Yeah.
oh yeah,
So your rents will continue
Rents
to
are
rise. Doesn't
skyrocketing
really
right
matter
now.
as long as you're comfortable and you can make that payment.
Mm-hmm.
Does it really matter in the short term what's going on with the value of the home?
yeah,
The only time it's going to affect you, the only time you lose money on something is if you sell it.
Yeah.
yeah. I've been telling these guys who are renting, trying to buy, and they're like worried about breaking their lease in June. I'm like, dude, it doesn't matter. Break that lease.
You're telling me. So he was telling me this how you should. I like to think of money and assets and stuff, right? So he was telling me, like, he was talking to a client and he was like, oh, I'm trying to break the lease. I'm like, that's not your client. If he's worried about a $500, he's breaking the lease security deposit, you should just delete him from your phone.
Yeah.
It's not worth your time. I wouldn't even talk to him.
Yeah.
Because he's like, oh, but what about, like, I am breaking my lease, I guess, next week. I don't care. I'm like, keep the $2,000. I don't.
Yeah.
Yeah.
I'm like,
totally.
I'm going to
Yeah.
buy $1 million house. You think I care about?
But it's my job as a realtor to educate
He can't do
them,
this,
and
but I can.
I just explained to them, well, this is how it works. This is why it doesn't matter. He was saying something about like $6,000 or something like that. It's like that $6,000 is going to be insignificant.
Yeah.
I mean, right away, you're going to own an asset. This thing is going to be well over $6,000 within probably the end of this month.
Yeah.
You
Yeah.
know,
1 month.
like at this
Yeah.
time. So
Yeah.
but that's part of the game is being there to educate. That's
Yeah.
what a real estate person is we're information brokers.
Yeah.
So
And I think that's just part of learning, right? Some people have to learn the hard way. Some people have to really be in the situation and experience it to learn it.
Yep.
Whether
I
they
think
can
I'll be-
hear it, but they're so attached, right, to their money first that they
Yeah.
don't see the big picture until it's
the thing
like
is
they've gone
people
through
are
it.
more afraid to lose something than to gain something.
Yeah.
And so we're always playing with that psychology, even as people who accept money from people who want to partner with us
right.
on deals, which it's to me, because I know our structure, it's like it's a slam dunk, of course. And I was actually just talking to Bobby Jacob today,
Oh, really?
and he's doing some deal. And I was like, tell me the terms, tell me what's happening before the sale, after the sale, all that. We pretty much do the same thing. Like our structure is identical,
Where do you think we got that from?
Exactly right. Obviously, don't reinvent the wheel.
Yeah.
But yeah, but the initial issue, and it still is, even though we're successful in doing it, and people can see that things are working, people are always still just afraid. Like, oh, I got to talk to my wife. I'm like, dude, that.
We got them both here. This
Learn from
podcast
Ryan.
is
Just
actually
do it.
a scam to actually get money from Ryan to
That's
invest
the whole
with us.
thing.
That was the whole scam.
That's it.
He's not even anything about his lending stuff.
That's right. That's all
What
it
are we doing,
moves.
Ryan? Let's go out on the podcast. $100,000.
Verbal commitment on the podcast
Yeah.
live.
Yeah.
$250,000. Let's go.
Yeah.
You don't need those rims, dude. Come on.
Yeah.
The rims can wait.
It's true.
But
The
yeah,
wheel
no.
almost fell off this morning, by the way.
Oh, what?
Yeah.
You're lying.
That's crazy.
It was loose, yeah.
Oh, man.
Ryan has 3 cars. Ryan, do you want to tell what cars you have? Do you have like a Honda Civic or like do you have like
Toyota Camry
Toyota
and a Corolla.
like a good
Hey.
like a gas
Yeah.
mileage
No,
car?
we
like
went
those
to lunch
Toyotas.
with this guy. He rolls up in a Rolls
Toyota
Royce.
Celica with
Rolls
neon
Royce
lights.
suicide doors. I'm like, what is what?
Yeah. The good thing with these two that I like is, Ryan is all high income, but, the real brains is, Nicole. She understands
Yeah.
assets, right? Because she came to my, what is it, meetup?
Yeah, your
a few
meetup.
months ago, and she
Yep.
was like, my boyfriend is a psycho. I need to bring him here. Did you bring him the first time?
Yes, he
Okay.
came, all 45 minutes late.
So,
Yeah.
no matter how much money Ryan makes, without Nicole, he's not going to have any assets. So we need to get
Probably
him
a
on that.
primary, and that's it.
Yeah, that's it.
eventually.
Yeah. Like a
Well, at
$5
least you
million
have. It sounds like you have your own business though, so it's kind of passive. But you're a manager, so I mean that's never really passive. So at least you have that going for you. You have a successful business.
The manager position is more of a passive income.
Mm.
But if I'm also not keeping my people busy and making sure their deals are closing and there's a lot of fires that we have to put out,
You
then
always have to be active. And manage
then that
people.
passive income is going to stop.
Yep. So it's never nothing's truly passive. I
Right.
mean, I like to say our stuff is. I like my mom doesn't even know how much. She doesn't
Not
even-
for me, not passive for me.
No,
but for
not at
his
all
mom.
for us. No,
Yeah.
we're super active actually.
Yeah.
For mom, because she was like, "Oh, here's like a little bit of something for this duplex," and she gets money every month, and she doesn't even know it. But if she was like Andrew, like gun to head, I need that money back. I need that money back ASAP.
Mhm.
Okay,
Yeah.
that'd be fine.
Yeah.
We wouldn't even need to sell the asset.
We're not gonna sell.
We would
the
just
asset for
refinance.
50
Oh, that
grand.
asset! I love that asset.
Yeah.
It performs
The
so
rates
well.
are
We forget
garbage
about it.
now, though. What we locked her at? It's
Right.
like 2.7.
So that's the only bummer.
Wow.
Yeah. So that's the only bummer. So we
Yeah.
refi it. The monthly would go up, but
Yeah.
if she needed her money back, she would get it all back. In
Yeah.
a heartbeat. So I like that. That the fact that the asset goes up every day and always will
Yeah.
is comforting. So no matter what's
Totally.
happening, whether if we have a sinkhole or crappy tenants who don't pay,
Hopefully the sinkhole eats them.
we're feeding all of our tenants into the sinkhole.
if they do disappear, they can't really sue us.
That's right. They're
Very
gone.
You heard it first, Ed. Any closing
But,
remarks? I don't want to keep them
You know
too
what?
long.
I guess I'll try to summarize what we talked about. So I really liked Ryan's story because when you rolled up in the roles and you just when I heard what you made per month, I was like, oh, this guy's
Just
not
FYI,
messing
Ryan
around.
makes more per month than I make in a year.
Yeah,
And I have 50 degrees and I have 20 patents and I work at a really good job.
I have a high school diploma.
Yeah.
There you go.
Ryan has a high school diploma and he has 3 cores.
He has what really matters, though, man. You had that drive and you
Yeah.
had that humility to just like take it on the nose and just keep going, man. Not many people have that, and I super admire that, And I think for sure, that's something you should be very proud of. And for sure, whether you invest with us or in gold or in something, you want to do that because, man, now that you got it at a certain place, you want to get in that passive income place. For me, that's what I'm working on as well.
Mhm.
I want to be finding more things that'll make me money so I can do less and less. I want that freedom aspect, so I don't have to. I like to just be able to go.
Yeah.
So to wrap, though, I'd say that work ethic. You had a mentor. You obviously studied and learned and did the work. That's huge. If you guys want to be successful at anything, that's the roadmap.
And I think one important thing for me that I learned, I think maybe I read this in a book somewhere, but maybe not, was everybody has that voice in the back of your head when you're going to do something that you don't want to do that sits there and tries to talk you out of it. Was retraining that voice into something positive and motivating and
That's great.
making yourself want to do it.
That's great.
Because if you choose not to, you're just going to go back to complacency.
Yeah.
Yeah.
And nothing's going to change. But the second you get out of that comfort zone and you force yourself to do what you don't want to do, that's when things start changing.
Yeah, you got uncomfortable. Sounds
Yeah.
like you were uncomfortable
Yeah.
for a while. And that is just, man, I love that. That's kind of where I am whenever, so like I grew like my music school to the point where I don't really have to be there much and my name's on the door. But when I walk into Keller Williams, I'm just like the freshman, dude. Like,
Yeah.
I know nothing. So I am in that process of where you were of just like, I'm just learning, man. I'm just trying to like, if I don't have the answer, I'll like, hey, Nasheen, let me get Nasheen on the line or something,
Yeah.
So yeah, it's not easy for sure. You really have to just eat that humble pie but it's because I have this like idea in my mind of where I want to be in 5 years,
You just get comfortable being uncomfortable.
Yeah.
Because
I love that.
that's what it's going to take it to the next level.
Every single person I've ever talked to who's like massively successful, every single one of them has said that in some
Yeah.
form, or have done that or executed it in some way of just like, hearing no a lot. Like that's really what it takes. Most people just avoid pain and seek pleasure, and so you have to fight your DNA, and I just love stuff like that. I love stories like that, and it sounds like Nicole's going to be on that path too.
Yeah.
And you're doing video content, which is probably going to help, bring you up even more in awareness. You've got a mentor, so you might just get like a slingshot effect and be crushing it. We'll do a podcast, just Nicole next year.
Yeah, I know.
She's
Watch
blinged
out.
out.
She's outspaced him.
She's blinged out.
She has 2 Rolls Royces.
Yeah.
Oh my gosh, imagine.
I've still got my
No.
one.
Yeah, just the one. Lame. Yeah. So I like that. That's a cool story. That's a cool takeaway, and that's very inspiring to me. And then the takeaway of I like that we kind of split this in half. If you want to get started, this is step 1, and knowing a little bit about this is really important, because if you call a guy like Ryan and your DTI is, just 500 and you don't even know what a credit score is 500 and your DTI is just, in the tank, you're going to...
It was bad the first time too.
Yeah. It was exactly.
Yeah.
Either way you
500
shape
is
that,
never
500. Yeah. But yeah, so if you come at it and you know nothing and you've just been a fool with your money and buying ridiculous stuff without the income to support it, that's whenever you're going to need to, eat some whole pie yourself and work and build that income, get rid of the debt, build your credit score, pay things off, and then save for the down payment. There's a lot. That's a lot to do, so hopefully this helped you guys to understand that's what you need to do first. Step 1 is to do that, to prepare yourself for the call for the lender.
I had one closing remark. This will be really good for our listeners. Is a lot of people think like interest rates and getting like the best rate is the most important thing, but that is actually my least important thing. Of course I'm going to try and get the best rate possible, but what I'm looking for is someone I can call, Ryan was talking about earlier, like how he will be always on the phone because when you're trying to get deals in this market, I don't give a crap if I have to pay like a little bit more to get the best service possible, because for me relationship and service is way more important than trying to go to another lender and get like 1/8 of a point better, right? That actually doesn't help you at all in the long run. We're going to refinance this in 2 years, like let's be sure, right? It doesn't matter like what the rate is. So that's the key thing. So have like good people on your team, so you can they will actually go to battle for you. Let's say my DTI comes up at 51. What if Ryan just walks away from the deal? He's like, you know what, it's not worth my time, and he just leaves. Now I lost the deal.
Yeah.
Trying to save 1/4 of a point.
Or sometimes we're on the phone 9-10 o'clock at night trying to structure deals and
getting those DU done for Stevie.
Yeah.
We've made the offer, right? We might be in the top 4. They said they're reviewing the offers.
Oh, good.
Yeah.
I could tell you probably 4 lenders that are cheaper than we are.
Yeah.
But you can't reach them. You're lucky sometimes to reach them during business hours.
Yep.
Yeah.
Let alone.
It's a lot of professions too.
Right.
Yeah.
Yep. Yeah, I love that you're just like, you're right there, man. You show up. So when you're telling that story, I was like, oh yeah, he's just that guy. That makes sense.
Yeah.
Well, especially in this market, you get a lender from the bank and they're working 9 to 5 Monday through Friday, and you can't reach them on the weekends. Let's say you go see a house on a Saturday. You need to see what those numbers look like.
Yep.
And for some odd reason, they're going to be reviewing offers Sunday night.
Yep.
You can't get your updated documents from the bank until Monday. You can't get your approval letter. You have no idea what the numbers look like. You're stuck. What does it matter what rate they're giving you?
You lost the house.
Yeah.
Yeah. I mean, you get what you pay for, So that's what it comes down to. So, yeah. Well, you guys have any closing thoughts? Anything you want to say? Let the listeners know. Say hi to Mom.
I think we pretty much wrapped
Ready?
up.
Yeah.
We could definitely do a part 2 and a part 3 on
I
this.
know, right?
We'll bring you back when we have more assets, Ryan. That's what we're gonna do.
Yes.
Closed
We'll
a
try
couple
to-
deals with you guys. So,
Yeah,
well, I
do that.
guess thanks so much for coming on to the podcast, Ryan, Nicole.
Thanks for
we'll
having
definitely try to
us.
have your links and stuff, so someone wants to get a hold of you guys and get some questions answered, or do a loan with you guys.
What's your IG handle if people want to follow you?
Yeah,
hit
sure.
you up.
I'm at Nicole Mortgage Lender.
Okay.
At Nicole Mortgage Lender.
At Ryan Kreiss. That's Kreiss.
Cool. Yeah, we'll add those guys, follow those guys, and get your finances situated so you can get some assets, or else you're going to be left in the dust.
Yes.
As abrasive as Vince can be about being homeless, he's actually kind of right. he's kind of right. So you got to give him a pass on that. So he's just telling you some hard truth that you need to hear. So Vince, closing thoughts, bro.
No, I think we covered everything.
Cool. All right. Thanks, guys.
Thank
Stay tuned for
you.
the next
Thank you.
episode.
Bye.
Peace.